Today I'm going to analyze Melengo's pitch, which is one of the 7 pitches and one of the 7 companies from the Launch Accelerator run by Jason Calacanis. Now, all these pitches were open sourced on YouTube, so I thought it'd be interesting to go one by one in each pitch and give my thoughts on what I liked about the pitches, what could have done a little better, and just take it slide by slide and rate the pitch deck and figure out whether I'd invest or not. So before I go in, just a general rule of thumb for those who haven't really looked into pitch decks before or thinking about starting your own and need some advice. A general format you can follow typically goes like number 1, what's the customer's problem? Number 2, your solution, then the market you're building in, what traction you have so far, revenue or customer retention numbers. What's the business model? How do you get paid? Why now? What's unique about this current situation? Is it a new technology? Is it a new consumer behavior that you can build on top of? What's the competition right now? Who are the big players in the industry? How are you different and ideally better? What's the team? What's your team? What's your founding team? What are your credentials? Why are you the team to build this company? Next, what's the ROI for the investor? What's the long-term vision? What are you going to do with this money? How can you get yourself to a $100 million in revenue company? How can you return that money for an investor? And then last, as some people forget, but importantly last, is the ask slide. How much money do you need? And why do you need that amount? What are you going to do with it? So these slides can be combined or extended. It doesn't have to be 10 slides. It can be 5 slides, and these can be mixed and matched. It can be 15 slides, and some of these can be separated and elaborated upon more. But generally, these are the boxes you need to check in your pitch. And a few just general strategies to imply. So first, you should front load the deck with your company's strongest features. If you're a team that worked at Facebook and Instagram and TikTok, and now you're building a new social network, that would be a really strong feature. So you should have your team early. If you have customer retention numbers that are in the top 1% of companies relevant to you, your competition, put that at the front. You want to catch the investor's eyes immediately so they know you're legit and are intrigued for the rest of the pitch. Another strategy would be to immediately address any concerns or questions early in the pitch to clear the investor's mind and keep them focused on your pitch rather than, the questions they have as the pitch goes on. So this is why practicing with many other people before your pitch is important, because you find out where the questions are in your pitch, and therefore to answer them ahead of time rather than have that question floating in the investor's mind while you're talking. You want every question answered as thoroughly as possible organically in your pitch. Next, the more numbers you have and the fewer words you have, the better. Next, you need to tell a story. And lastly, that story needs to exude confidence and optimism so that the investor can feel like they want to take this ride because they think it'll be successful and they think it's going to be fun. Just a general note, I know I said the ask slide is really important. None of these pitches have the ask slide because I think that's just private information. They don't want that out on YouTube. But all the other slides I said, all the other 10 boxes you need to check are all in here. So that's a good start for these decks. All right, so let's get into Melengo.
Hey everyone, my name is Justin, co-founder of Melengo.com. We're the easiest way for brands and creators to develop and scale fashion products.
So I like the tagline. Again, every company needs to have that one sentence, few word tagline. Easiest way to develop and scale fashion products. Solid. Okay.
Meet Daniel. He's the founder of Daniel Patrick, a fashion brand doing $5 million in revenue. He is pretty much all hands on deck as a 2 or 3 person team and doesn't have the time or resources to iterate on all of his product ideas. This is leading to missed growth opportunities.
I like how it's told in the deck. I like how he starts with the problem by introducing a real customer of his, a fashion brand entrepreneur that uses their product for their 3-person team, for example. So by describing why that customer uses the product, as Justin does here, it's just a great and interactive way to address the problem. Instead of just a blanket statement like fashion brands don't have automation tools to quickly iterate on their design ideas, Justin instead here confirms the pain point felt by a real customer he's worked with. So that helps tell the story, which is again really important. It helps make it personable, and it helps confirm the fact that this is a problem. And so this seems like a very real problem customers face. I'm sure many fashion designers are frustrated with how long it takes to take an idea they just drew up on a piece of paper and turn it into a mock-up. So I understand this problem. Let's keep going.
On Melengo, he uploads a sketch and says he wants to create a new line inspired by a military surplus store. He gets feedback from our co-pilot on the best material choice and gets his idea turned from a sketch into a digital design. Next, he wants to create a sample. We're building an AI to automate the tech pack creation process so we can send the files straight to the factory. He receives the samples in 7 days, loves the results, and when he's ready for his bulk order, Melengo gives him the best pricing, finances his order, and routes the product to the right factory partner. All this manual work is handled for him so he can focus on what he does best. And because of this, he's able to launch his new collection in 6 weeks and he sells out for the holiday season. Ever since then, Daniel uses Melengo to quickly test new product ideas and scale the production of his winners.
In the deck, I like how Justin goes from introducing the customer and the problem to showing a real demo of the product, which looks like kind of like a ChatGPT interface while explaining how the product works and how it solves a pain point for a customer. And so I love the idea of showing a demo to explain the solution. It helps an investor completely understand the process for the customer to enhance the fact that this is a problem and Melengo is a strong solution to that problem. It's also told in a story that goes from the start of the process of using Melengo to the end, showing how quick and easy it is to use for a customer. It seems like a real problem users would face, and it seems like Melengo is a real solution to that problem.
That's why brands like Under Armour and Red Bull, record labels, media companies, and creators like Robert Downey Jr. are using Melengo to quickly launch and scale fashion products.
So I like how Justin shows, the images of these brands, and I like how it shows reputable customers use the product, like Robert Downey Jr., like Red Bull, like Under Armour, showing that Melengo is a legitimate company and a legitimate product and a legitimate solution that these people are facing well enough for multi-billion-dollar brands to use. So this slide should have been emphasized more and elaborated upon further. It was only like a 10-second slide. And, there's maybe 10 images of strong consumer brands and individual influencers that, if using Melengo, could generate substantial revenue. So if these were serious clients, I'd expect a high revenue number. So I'd want to know how often these individuals and brands were using the product and what for. This could have been a slide that makes me want to invest, but the lack of the explanation on how these customers use the product and when they signed up for Melengo and why, that lack of explanation kind of gives me concern as to how relevant this information is. Maybe one team member within Red Bull used the product once and hasn't come back since. That is a lot less interesting than Red Bull, the company, using the product multiple times. And so this slide is an example of how the slide is told can make investors excited or cautious. Rather than being like, oh, he has all these great customers, Melengo must be a great product. Now I'm thinking, well, since he just showed me a bunch of logos and didn't say much about any of the customers, are they really legitimate customers? Or is this kind of just a flashy slide that doesn't really mean much at all? Could actually be a negative trade if they used it once and didn't come back. So it's just a reminder that how you tell the story on each slide is vital for this reason. And you don't want to create questions in the investors' heads. His vagueness made me question how legitimate these partnerships are. And now I'm waiting to ask that question for the end. And I might miss some other important information because I have that question in my head. So here he should have just elaborated further on why these customers are using it and how often. And I understand this is a quick pitch. All these pitches are 3 minutes, but still, this is an important thing to get out there and just explain a little more.
As a managed marketplace, we take a tiered take rate of the purchase order and act as the seller to our buyers. We've also built in embedded lending so that buyers can take advantage of net 90 payment terms. Other revenue streams we're testing include subscription services for enterprise customers, as well as referral fees on the shipping and fulfillment partner side.
So this slide was pretty confusing, and I had to actually listen to it a few times when I first listened to the deck, even though it's just a few sentences in 5 seconds. The graphic is confusing because it's just dollar signs. And so I understand maybe not wanting to publicly share what the take rate is, but the graphic was confusing. He should just say they take a percentage of all purchase orders on their platform. But in general, the take rate, the lending business model, and the factory referral, revenue model all make sense as revenue streams and are good two-sided revenue streams for a marketplace. But he introduced a subscription model for enterprise companies, but didn't explain how that worked. It seems like they already have some enterprise customers with Red Bull and Under Armour, so how would they pay you through that subscription model? That I would like to know because these are probably the cash cow customers that he's targeting. And it seems like he already has several of them. So it just raises another question about the legitimacy of these enterprise customers. So
we've grown to a 366,000 net revenue run rate since launching this beta in June of last year. We have a few million GMV in the funnel.
They went from $53 in revenue in June to $30,000 in revenue in January. So that's a good sign. This is a good, clean chart. Nothing special about it, but it's always good to show a chart regarding revenue growth, one that's easy to read and easy to understand. But this chart's a little janky, with some months growing a lot faster than others. So I want to know why that is, why some months have such high growth and why some others have negative or nearly flat growth. It's also worth noting that this isn't recurring revenue, which would concern many investors. A lot of investors like subscription revenue. This is just straight revenue for that month. I don't have too much of an issue with it because, this is a volume business model, and apparently Melengo intends to release a subscription service. But in a volume business model, the more the customer uses it, the more they pay, which I think better aligns incentives and helps reap the rewards from the whales. If you have someone who you earn $50,000 from, a massive customer spending millions on Melengo, that's more value accretive for Melengo than if they charge just $10,000 a year subscription fee. So it caters to the whales better, but it's less consistent. So it's a little less of a sure thing for investors. So besides that, it's not recurring. As you can see, this chart's just not a smooth up and to the right. So I just want to know why. Why did, for example, November to December not change much? Why did December to January have a very little bump? Why wasn't December such a bigger jump than November if that was considered the holiday season? Usually there's a lot more sales in those months. So I'd want to dive into this chart a little more to understand just what's going on here. It's just not the cleanest looking revenue chart. So
we believe now is the perfect time to do this. There's been this graveyard of fashion manufacturing startups over the last 10 years that have tried to create this process, but couldn't automate their way to venture scale. And so for us, each factory is using our manufacturing execution system, which breaks down the status of each project. We're building a co-pilot that can prompt the factory for capacity updates, help them answer questions around order quantities and colorways. For every step of the process, for example, if the factory has a question on the stitch in the pocket, we can tell it via this AI that it's purely for aesthetic purposes.
So again, seeing a little more about the product was nice. We already kind of saw the demo, so we didn't really need to see too much more. But I understand him showing it to say, here's how we're different from these startups that have failed in the past. They didn't have this automation aspect, this AI co-pilot aspect that makes it such a better product than those in the past. But I didn't like this slide because he's not only selling me on his product, he's also selling me on the market. If there's no market, there can't be a product. So the fact that no startup has succeeded in this industry, as Justin here refers to as a graveyard, which in general, I would just avoid negative terms like that in the pitch. I would try to keep it positive because what he's calling a graveyard is past companies in this industry. So he's calling the market a graveyard. So that makes me a lot less confident that there's a market here and that there's a company that can build in it. You're saying basically everyone has failed before, but we can do it. We're the one that can break through. And that can be pretty hard to get behind. I understand that their processes are much better than what has been done in the past. And again, like I said, it's automated, so they're better than past competitors, but it's not very reassuring that they can succeed since there doesn't seem to be a proven player in the market. I would have rather have seen at least one of these companies be successful. And then Justin would say something like, company A here is successful, but users complain that the process is too manual. So since we automate it, we believe we can take their customers and capture this market. But that shows me that there's an underserved user in a proven market. And that makes me excited because then there are users using a product that they don't like, that they're looking for something new, and Melengo can be that something new.
There's other venture-backed or public companies that we count as competitors, but none of them can automate the entire manufacturing process for these custom products because they're either horizontal solutions or unmanaged marketplaces.
This is a general competition slide for those who haven't seen too many pitch decks before. You show a few companies you think are your competitors. You show a few features that you have all of, and then that some competitors have a few of, or sometimes only one, sometimes only two. There aren't usually competitors in a slide that have zero of the same features. Like Printful, for example, I don't know why it's even there. It doesn't have automated manufacturing, project management, software factories, or embedded lending. So it doesn't seem like it's a competitor if it shares none of the same features. So I wouldn't even have that in there. I would try to get a better competitor. But I don't think this is, in general, the best competition slide because I don't think these companies have much to do with Melengo. Alibaba is just a marketplace. It doesn't have this design to product feature or this factory automation feature. I'm not sure what they have to do with one another. I understand they have project management tools and embedded lending, but those are side features of Melengo. The main product of Melengo is automated manufacturing and software for factories. And none of these companies on these slides have those features. So this kind of just reaffirmed my concern that no one is building something like this and no one has succeeded building something like this, potentially for a reason, because there's just no market for it. So again, it just reiterates what I felt in the last slide, that there might not be a market in this. So why would this company be the one to be successful? So let's keep going.
So our roadmap is to launch these Gen AI products in Q2 of this year. We'll get to 10 million net revenue in 2025 with 150 brands doing on average 400,000 a year in COGS with us. Our plan is to get to 100 million revenue by 2028 through expanding product categories into more complex fashion products. Our ultimate vision is, how do we get the minimums down to 1 unit? We think there's a really interesting world when people are creating the ideas in their head with AI, and we're the infrastructure or plumbing to make that happen.
So a few thoughts. One, I think it's very optimistic to go from maybe 1 million in revenue in 2024, which I already think is pretty optimistic based on how they only did $30,000 in January and how their growth rate really isn't that fast. I mean, $1 million in 2020 already seems like quite the stretch. But then to say we'll hit 10 million in 2025, I mean, that's just such an insane jump for a company that hasn't shown real product market fit. A month of your revenue of 2020 for the year, you have to do almost $1 million a month to get to 10 million in revenue by 2025. So I would really need to dive into their numbers and their customer behavior to see why they think this can happen. I like how he said if we get 150 brands doing 400,000 in COGS to get to 10 million in revenue, I think that's a plausible goal. I think that can happen. I just don't see that happening by the end of 2025 based on what I've seen in this pitch. I mean, that's only, 21 months from now? I mean, that's a lot that has to happen. So I know, you want to be very optimistic in these pitches. It's all about exuding optimism. But the problem with this is like this slide didn't get me excited. This slide just made me think this is outrageous based on what I've heard today. If I've heard a story that got me really excited and then I saw this, I'd think, this is possible. This really could happen. I'd probably mark down to say maybe in 2031 they get to 100 million in revenue because this is just insane in 5 years to get to that. I just don't have that feeling because I've had so many questions throughout this pitch about their market, about their competition, about their customers, like whether this is real, whether they're really using the product, why so many have failed. And also what I've liked to see in this chart, which is hard to predict, but if they had some plan around, how many of those companies are Daniel Patrick's, the individual creators building out their own brands on this market, like he said, for the customer that he introduced at the beginning and gave the problem and the solution for. How many of those brands do you think would make up that $10 million number? And then how many of the Red Bulls and Under Armours do you think would make up those numbers? Is it 10% of customers are those big brands, but they're doing 80% of the revenue? Or do you think there's going to be, 50 of these individual brands making up that revenue? So I'd like to see some type of breakdown because, again, that just gives me an idea of who are you mostly targeting, because these are very different customers to target. Getting an enterprise customer is a lot harder than getting an individual consumer to use the product. Those are very different marketing and selling strategies. So I'd want to see a breakdown for that in this chart. And I'd want to see a plan for how they intend to sell to those clients, whether the individual builders or the big brands.
We're the right team to do it because we have deep domain expertise. I've previously bootstrapped a 7-figure fashion brand and have 9 years of tech experience. My co-founder, Greg, has over 20 years of experience and co-created Nike's largest textile program. Jason's an investor. Cyan, Bannister led our pre-seed round. We're Melengo, and we make it easy for anyone to develop, finance, and scale fashion products. All you have to do is dream it. Thank you.
So this was a great team slide to end on. I think it was a great way to just cap off the deck and finish on a strong note. because, first of all, they have very reputable experience and relevant experience from, as Justin has scaled $1 million fashion brands in the past. Greg here co-created Nike's largest textile program. So they have a lot of experience in the fashion industry. They can speak their customers' language. They know their pain points. So that's great. That is a perfect founding team for a company like this. Also, I was really surprised to see that Cyan Bannister led the pre-seed round because she's an exceptional investor. If you don't know, she's invested in Uber and SpaceX and Postmates and several other companies at a very early stage. She is one of the best angel investors ever. So to see her on the screen made me question everything I was thinking earlier about how hesitant I was to back this company. So maybe these questions I have, Justin and Greg can answer them in a way that gives me confidence instead of caution. So that was pretty crazy to see. But regardless, great team, great founding team for this project, for this company. That right there gives me a little more confidence, and I'd be a little curious to learn more about the company and whether they can solve some of the questions I have. So now I'm going to touch on a few things I liked about the pitch and a few things I didn't like about the pitch. So first, it was a good product demo. It really helped you understand the problem that a customer feels and how they're solving that problem, how Melengo solves that problem. I love using a real customer as an example to solidify this point. Shows that this problem is real and your solution is viable and one that customers would enjoy because you have proof that a customer had this problem, used your product, and now is a staying customer because they really enjoy it. And I got to see that process from the customer of using the product, what it all looks like. So that was a great product demo and a great use of showing a real customer to relay that point. I love that. What I also really liked is this team is a very applicable team to this problem. And they describe their industry experience well in a way that gives me confidence that this is a great team to address the problem. Again, Greg, 20 years at Nike, largest textile program. Justin has scaled $1 million fashion brands in the past himself, so they understand manufacturing, they understand fashion, they understand building products and design and creating brands. This is a great team to tackle this problem. So I really like those things about the pitch. What I didn't like about the pitch was vagueness around the top brands using the product. How much have they spent? Are they coming back? Why or why not? I just need to learn more about these seemingly excellent customers like Red Bull and Under Armour and Hoka and so on. So want to know more about that. I didn't like the vagueness around the business model and how many customers in each bucket are paying them. What does that subscription look like? What is that take rate? How much money are you getting from each category? It was just very unclear about how they earn money because this is probably a low margin business. So I need to understand that margin because low margin businesses are never really promising to invest in. So I need to just understand the business model a little better. I also didn't like the inconsistent growth in the revenue chart. That obviously gives me concern about how well they solved this problem they're addressing. We haven't been growing that fast, and it's been very inconsistent growth, showing that it doesn't seem like they really have product market fit yet. So I'd want to dive into that a little better just to see why that growth has been so inconsistent so far. I didn't like the why now slide. I understand these AI tools just came out that makes a product, using LLMs like Melengo, that wasn't feasible in the past, and now it is. So they're taking advantage of that. So that's a good why now idea, taking advantage of a new technological innovation, but calling all past competition a graveyard of failed startups, gives me more concern that this industry may not yield a successful business, even with Melengo's technological advances. I just didn't like the way that was framed. Again, I would have rather seen at least a successful player in this market that isn't using AI, that their customers don't really like, but the problem is so intense that they need to use this product. But if you come in, if Melengo comes in, shows them that they're way better than that incumbent, they can take all their customers, and then I know that market's there and that they can take it. That's a lot better than saying there's no market right now. Which goes into my other point that the competition slide didn't really have any real competitors. Some weren't related to Melengo at all. The key features that Melengo has, no one else has. So there aren't really competitors. And, it just reiterates my point that there's no competition in this market because none of these companies have worked before. So whether this market is legit is up in the air. So because of the things I liked and the things I didn't like, I would pass on this deal. I really didn't like the vagueness around the market and the competition. I really didn't like how their customers are using the product, just the vagueness around that. But I will say, if I do know how the top brands use the product, if they are coming back, if they're using it more and more, if Red Bull spent $2,000 a month in December and then spent $15,000 a month in January, then that would be really interesting to me. That might be enough for me to invest. Maybe that's what Cyan Bannister saw. I don't know. So I need to know how these top brands are using that product. If they're coming back, if they have a lot of retention, that's a great time to invest because those are the real cash cow customers, I'd assume. But overall, I'd rate this pitch deck like a 5 out of 10 because there were just so many questions that I got during it. None of them felt answered. Sometimes you might have one or two questions. I had like 5 questions after this slide deck. So he just needs to answer these questions a little better during the pitch. Again, these are 3-minute pitches, so I'm a little harsh by saying he didn't answer these questions because you can only say so much. But I think a minute or so of this pitch was showing the product features, which is great. But these questions I have are more important than seeing the product features. I don't need to see that the product's great. I can see your customer retention numbers to know the product's great. So a little less time on the product demos, a little more time addressing these questions about how they're earning money, how their customers use the product, how they anticipate to get to 100 million in revenue. What's that breakdown like? Why has their revenue been up and down so far? There's just a lot of questions and not a lot of answers. So not the best deck. Again, 5 out of 10. Again, I'd pass on this investment, but definitely a lot of lessons in here for you to come back on. Again, awesome use of a product demo and customer example, but hopefully you can see where he went wrong here and where he could have done better. So I hope you enjoyed this little breakdown of Melengo's slide deck and the recent pitch for the Launch Accelerator. Next week, or not next week, check back in 2 days. If you subscribe, you'll get an alert for it. So you'll be able to click right on that notification and come back to the channel as soon as I release it. But subscribe so you can see the next pitch in 2 days from now from this company, Podcast AI, that I'm really excited to talk about more and was a very different deck. So you'll learn a lot more things you didn't learn today that you'll learn on Wednesday. So stay tuned for that. If you like this video, That sounds crazy.